Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Marty. How we doing in YouTube this morning? Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. I hope you guys are hearing me okay in YouTube. Let me know. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time. Thanks, BX. And this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame as a chassis to overlay trades on. This stream is based on structured trades. They are available to everyone at no cost in the Bookmap Discord Trader Lab community, as well as a library of webinars on this process. This is really built on the idea of gaming theory. In other words, how do casinos operate? They only play games that have a statistical edge, and really we are in the same business. We're in an uncertain environment, and we have no control over the outcome of any trade. The only thing we control is when we interact with the other participants in the market, and we can only really grade ourselves by following a vetted structured trade plan. When you have a plan, you know what you will do before the market gets to that location, and you also have quantified what the behavior required to trigger a trade, how you will manage the trade, etc. All of this is done outside of trading hours, so that when you come to trade, you actually know what you will do before it happens. In other words, you anticipate to participate. You don't make it up as you go. You don't impulse. And when I say you don't make it up as you go and you don't impulse, this is human behavior. This is what most of us do, especially as we're developing. And then, in order to potentially create sustainability in this business and actually have a business and potential career path, it's really about doing what other traders don't do. And most traders do not do the work required to determine whether or not they have a statistical edge when they interact with the other participants. The casinos only play games that have a statistical edge. They have no control over the cards or how gamblers play the cards, but they do have control over the games they play and how they play their games. And you'll notice when you go to a casino, if you've ever been, which I bet most of us have at some point, you'll notice they don't change the games. They don't make them up. You'll notice that the gamblers do walk out with cash. Casinos are in the business like we are, and businesses have costs of production and overhead. However, the casinos just keep doing the same thing. They don't change it. They don't make it up. Isn't that different than what most of us do? So do you think maybe following a process that's already successful, that is gaming, and actually instead of sitting on the side of the table with the gamblers, you try to sit on the side with the house, which may give you an overall edge over other traders who are not approaching the business using a successful business model, such as gaming. So, shall we? General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. I start at the beginning, lay out a plan, discuss how the trades develop, what the trade management process and targeting might be. And then if we get into real time, that's where we go. And we go from there. Grab a pen and a piece of paper. I'm going to give you a couple statistics. Remember, you have to vet everything for yourself, and past performance is not necessarily indicative of future results because the outcome of everything is random. So let's go to take a look at Bookmap. Remember what the stream is about. It's about integrating Bookmap order flow tools with auction market theory on top of the volume profile. Volume profile is really the volume in the sense of, if you think of trading like shopping, the function of the market is to figure out what's too high, what's too low, and what's just right. And it's similar to what happens when you go to supermarket or anywhere else. And really, you're looking for a fair price. If the price gets too low and it goes on sale, it doesn't stay there indefinitely unless there's a change in the fundamental aspects of that product. If the price gets too high, the buyers will run out, and then if the sellers want to sell the product, they got to lower the price to entice the buyers back. This is what creates our rotations, and this happens in all time frames, or as I think of them, as fractals, because there's no time. Time is only about the open and the close, and let's say the EU close, and some other little elements, but it's not your 5-minute, 10-minute, whatever. It just really doesn't operate that way, at least in my opinion. It operates in the sense of what time does it take for these participants right here to determine a price that's either too high or too low. And if the retail price right in here just happens to be too high, we can leave it. This is really what an auction looks like. So if you get too high, buyers are here, sellers are here, sellers are there. If my sellers come in here, then I can anticipate a rotation. That's the basis of the fractals or the way the market might behave. Then it is potentially putting pieces together in higher time frames, as you think of them. And for me, it's just fractals or intermediate time frame, developing daily time frame, microstructures. You'll see. This is kind of how this works. So now let's take a look at a couple levels. Down here is something called the microcomposite volume point of control. Whoop, hold on a second. Let me make sure this is correct. I'm sorry. It's a microcomposite high volume node. This is not here. Let me just see if I got everything on here correctly. Yeah, I did. Okay. This is a previous price that was fair. In other words, a retail price, and it's in the intermediate time frame. So the potential is, and this is just for starters, to come back here and check this high volume, because this is a retail price. Now, the next area is the ETH volume point of control. It's the same as this in a different time frame. This is the high volume from the ETH. So think of these sequentially. Like in a higher time frame, this was fair price. Now, the thing about the market is there's no precision. It is ballpark. I call it horseshoes and hand grenades. So it's just in an area. These are levels. They're not walls. Now, sometimes levels are exact, and other times there's a lot of slop. Part of the reason for the slop in the market is the velocity. For example, if there's buy stops, we can have a level and the market can go through it because the momentum of the buyers, like here, you see the buyers, okay? So we then have, the overnight VPOC, the probability of getting here based on opening higher inside of yesterday's range, and you got to vet these for yourself. Past performance, not indicative of future results, is an 82% probability. So we'll think about that, okay? The RTH open is here. So we have an 82% probability of going here. If we get under there, we have a probability of going here. So that's the downside. Now let's go the other way. So all this is laid out before the market even opens. This is yesterday's RTH naked volume point of control. So what are these terms? This is the ETH volume point of control. So in the last auction, 82% probability we're going to get here or not. This is the higher time frame retail price. It's a VPOC or highest volume, but it's in the intermediate time frame. So think of these like magnets. The market tends to come back to retail. If a price is too low in a store, you can't buy it there. It can come back to this retail price. If it's too low, you can't buy it there. We can check it and then go back the other way. In the intermediate time frame, this is the retail price. So think of these like varying degrees of gravitational pull. The more volume you have in an area, the more the market tends to get attracted to it. And it's always random. Will it? How? All of that's part of the joy of being in a random environment. This is yesterday's retail price. There is a 67% probability we'll get here. Yesterday's high, you'll find this one kind of interesting, about a 54% probability, but there's another piece. There's an 81% probability we'll either take out the previous high or the previous low. Well, based on yesterday's behavior, in other words, the market goes up to go down, and we took out the previous days. I think it was Friday's low. We took the sell stops out. Once you get the shorts out, the market does what? It tends to go up to go down and go down to go up. Yesterday, we went down. Where's the stops? Above yesterday's high. So if we get ourselves on the long side, we're looking for this and we're looking for that. And there's more. This 5,800 is our next target. It's another one of these. So yesterday's retail price is here. If we get above it, then the possibility is to come back to the one above it, 58. So our target today, not a recommendation at the moment, is 5,800 is the primary target. And it can still go higher, but this is where we're kind of aiming the barge at the moment. So now you have levels. This is before the market opens. Now let's get into the first trades. And remember, the stream is to help you understand market mechanics. How can you create order in randomness? In other words, we don't control how this thing is going to go, what the rotations are, what the participants do in different time frames or fractals. We control our own behavior, and the outcome of any interaction is random. Any participation is random. So I'm going to talk to you about trades I took. I'm going to talk to you about structured trades. Now, the trades I take don't necessarily mean, I take stops too. In fact, taking stops is part of staying in the business. Remember, the casinos pay the gamblers. So I'm over here now. This is the ETH still. And here's what I see in the ETH. I'm going to show you this because I base what I do on the most recent behavior. This is the retail price in the ETH. So I know it has about an 82%-ish probability of getting checked. And also I know that I'm looking for a squeeze. So I've kind of got dueling conditions. So I'm looking, now here's what I want to show you about this. There was sellers here and the buyers took over here. So I see this move right before the RTH opened. So I'm thinking, I've got the ETH high, which by the way has a high probability. It is, hold on. Where is this? There it is. ETH high. So I'm thinking this is my target coming up. And if I can get through here, I have other places to go. So this is the ETH high. It has a high probability. I have my buyers here. So I'm going to show you the first trade I took. And it's not necessarily a structured trade, but I integrate order flow. I call it the tip of the spear. And if you haven't watched my primer webinar, it's available to all of you in the Trader Lab library. And it's got about 31,000 views or something like that. And it gives you a high level overview of this process. But so let's look. We had sellers here. This is the absorption detector. And I'm seeing selling icebergs here. But I'm also seeing the buyers are taking out the limit sell orders. I come up here, ETH high, and this is made right before the open. And I see my sellers here. So I'm going, and I see absorption here. Sellers are here. So I'm going, okay, I want to get long. So I looked at this and I said, if it pulls back here, even though I have conflict, I'm going to take a long going for this. So I'm going to show you my trade, and it's not necessarily a structured trade, but I want you to see how this works. And this doesn't mean the trade works. It's just a trade. So right here was my buyers. The market opens. I see my sellers right here selling icebergs. This is the developing volume point of control. I label these. I'm just going to show you process. I am a process-oriented trader. I call it following the yellow brick road. I just try to follow based on trades I have vetted. Now, not everything you're going to see here in the stream are structured trades. I like to also show you structure and how the market behaves so you can kind of begin to read this, especially if you're using a high tier tool like Bookmap. So right here, remember the buyers, and you can see them. So right here, I have a target here. I get my sellers, and I'm going, oh, that's interesting. 80-ish% plus probability to get here. Buyers here. Now let's look at my first trade. I'm just going to tell you my first trade, not saying it's good or bad or anything. So I come back to where my absorption was. I see this is so this is directional. I have a microstructure here, sellers below here. This is a little consolidation. You can see the high volume there. So high volume is here, and it's too high. We leave it. So this sets up two possibilities: a long back to here and through the overnight high, or a short off of here. So I take the long. So right here, I come down, my microstructure is here. I see a buying iceberg here, and I have to reference this to where the sellers got run over right here. That's why I'm looking for long right here. So I take my long. I'm looking to come back here to scale. And I always give it 2 ticks. So this is at 73. So I'm going for 72.50 for a scale. And then I'm going for overnight high. And that. So let's look what happened. And this is support. Variable high volume node right here. So I'm going to label it. So let's just watch how the market behaves. And if you have questions, please post them. I'll get to them in a little bit. I can't see them while I'm doing this, and I want to get caught up as quick as I can. So this is too low. That's support. That's resistance. That's why long scale, and I always get ahead. 2 ticks is my personal agenda, because these sellers here could re-enter. Let's think about what goes on here. I got icebergs here. So if these guys, these sellers, think this is a lovely price, might they sell it again if they get a chance up here? So I always give it 2 ticks. That's just my thing. And I get taken out. Okay? So that's a scratch. Sorry, guys. Son of a gun. And look where we come. Right here. Boom. So I was very tight on this. So, for me, it was to here. And then once we took this out, I was out. Now, here is our variable high volume node. This could be another long right here, back to here. This is more structured, 6-to-1. Either one is okay. Now, here's our micro high volume. And remember what happened here. The sellers were here. That's why the scale is here. And there's our sellers. And there's our icebergs. Now, let's come and look at this. This is resistance right there. So I come up, go into the moon, and what happens? These sellers are activated again. Break down here. So if you took a long, like this is also a long here, break high, pull back, structure is here. These sellers were absorbed. The passive side is here, and you can't tell until after the fact. I come up here. This is resistance right here. You'll notice the selling here. This behavior is the same as that behavior. So right in here, it looks like we're going to go south of the border. So what happens is, and right here, it's I don't know, right? Breaks high, pulls back. Now this is support. And now you get the bullet train to here. This is resistance. I get my break here. Now right here, we're in, of course, 2-sided trade. So it's anybody's, it is a guess. Sometimes we call it an educated guess, and other times it's just a guess. So resistance, support. Let's watch. Breaks below, and we get to our overnight VPOC. So Depending how you play this, it's either longs come out the top or you're playing shorts to go for the statistic. Either one in my book is okay. Just saying. So this fails here, and we come down to this. Now, here's another possibility. If this is too low, we can bounce off this, and this would set up a long back to here, and possibly the mid and the VWAP. So let's see what it does here. So this is the location to observe. That's how I like to say observe, because what happens right here in the micro high volume structure is going to give us either a buy or a continuation short. So let's see what it does. So this is a sell, right? Who knows? This is support. Who knows? You need it to come back and take this out. Breaks below right here. This sets up a short or nothing back to here. Then whatever happens here, it's a long back to here, or if not, south. So let's see what it does. Notice the structure is here. So right here is the structure. I break low. This is a Trader Lab potential trigger. Sellers are here. Buyers are there. You see the absorption. Break low, come back. If I can't get over this and this, then the potential is to go south. And we come down here. Now, right here, market rotates up. Now, this is kind of hard because what's going on here, now I don't have a short, I'm just, because I was looking for a long here, no long. So then it's here. Once I'm under this, then for me, I am looking for this next high volume level, 61.25, and it didn't do that. So now what? VPOC migration, too high. So now this is the retail price. So I'm going to mark it. So for me, I'm looking at this and I'm going, well, this looks like it's going lower. So this right here is my support in the profile, high volume intermediate time frame. This was retail in the ETH. This actually sets up a potential short. It's mid in VWAP, and then this is your support though. I'm going to get this out of here. Let me get rid of this thing. And the way I kind of look at this is high volume, that's too high. Micro high volume is right there. If I break in VWAP and mid, if I break here, this is resistance right here, and then this is support. So and then this is a tight range, so I don't typically do much in this kind of a thing. But if the range was larger, I'd take a short here to scale here because the buyers were in here and the buyers are down here. So I come down, and what do I see? I see buyer absorption here. That's the absorption detector, and there's icebergs and wonderful. So here, I cross above. Now, I have no way of knowing anything here. But what is too high? This. So right here, if I know this is too high because we're below it and now the retail price is here, let's think of it like shopping, remember? If this was too high, then I know I have a possibility that this can be a short, and there's the absorption into my level here, and that this is support. And then and then the target would be coming back here. Now, here, I squeeze out the sellers here, buy stops are here. We go into the stops, selling icebergs, and these buyers, which are the stops, are being absorbed. That's a selling absorption detector. So there's resistance. Notice where we come. Micro high volume is here. This becomes a short to here. It's high volume. I'm not paying that to the current retail price. This is a short to here if you have a trigger for it. And if it runs away from you, you have no trade. Notice where we come here. Notice where we come here. This is trading the auction. Now, you got to have enough range for this, and you have to have timely execution. How can we do this? Well, we know the buyers are here, and we know this is retail. And if we understand market mechanics or the auction, we know that this is retail. But if I rotate up, I know the sellers are here. The passive side is right there. And there's the absorption here. What do I get here? Same. Notice the similarity and location. So this is all structured trading. And this is your support. And then again, you're looking for this thing. Now, there's a change. We come down here. Now, no way to know, right? So for me, if I take a short here, I'm scaling here and I'm managing the trade. Once we come out above here, things have changed. Now, this is too low. And once you clear this, then it's saying north. Now we have to find a way to get into this. Let's look at it. So what do we know? Mid VWAP. What do we know here? This was resistance. You guys remember this concept. Resistance becomes support. And I have the mid. So right here, now I'm out of my short. I'm just telling you what I was doing. I'm not saying it's a good plan. Some days it's good. Other days it's like, what's going on? It's just the nature of randomness. So here I see a seller and I see the buyers absorbed this seller. It's like Pac-Man. And now I also know that right here are stops. So, and this is support. So I have mid, VWAP, support. Variable high volume node. Hold on, guys. So this is a long in the trader lab here. And then we are going for this and higher. So let's look at it. So this is the next target. And it's 9:30 my time, Central Time. At 9:30, whatever the current high is called the initial balance high or low. Here's another statistic for you. And again, you have to vet these. The probability of taking out the first hour's high or low is almost 98%. The probability of taking out this, the initial balance high, one of them is 98, right? First hour's low or high. The probability of taking out the first hour's high, lost it. 67% probability. And taking this out, if you remember from the top of the stream, is 67% probability also. Taking out the ETH high was 69%. So all the stats, so even though I was looking at shorts, I know, and this had over an 80% probability, I didn't know. Of course, I don't know what's going to happen first. So, but once we get on the long side, then it's here, north, and helmet. So this, we're looking for this to get taken. So we have this, and then what else? Yesterday's high. Previous high or low has an 81% probability of taking one or the other out. Based on what happened yesterday and that we took the stops out from Friday's low, that shows me potentially the fuel or buy stops is above yesterday's high. So I'm going for yesterday's high, which is up here, right up here, that green, little green. Let me show you. So all this is long, with the 5,800 is the next target out here somewhere, if it ever gets there. Who knows? So this is Trader Lab trading. I'm almost caught up here. So this is the next target, and I gave you the statistic, about an 81, 82% probability, because I don't anticipate at the moment we're going to take yesterday's low out. This is now the current retail price. And I'm going to show you the next target up above, which is this. So that's it. Now we're up to date on the trades, but there is another trade in here I got to show you because I took this one. Now, in the Trader Lab, we have a number of different trades. We have at 9:30, remember, we have the 98%-ish probability we're going to take out this. And about a 67% probability we're getting here. All see the alignment. Now, yesterday's high, remember, yesterday's high, about an 82% probability-ish we take out either yesterday's high or low, and you know we're going north. So you got to kind of go, well, okay. So what's our next structured trade in the Trader Lab? It's called the IB continuation trade, and this is a beauty. And guys, if you're in Trader Lab, you should be screenshotting these. Now, I'm going to label this variable high volume node. You know I follow a process. I just do the same thing. Why? In the casinos, they just do the same thing. I just do the same thing because I don't know what's going to happen with all this, but I do know the structure. So I label the structure to try to stay consistent and also not miss transitions in behavior. So the next trade is a structured trade. Let's look at the pieces before we get here. So we come out and we get our IB, our breakout of our IB. Remember, over about a 98% probability. And then yesterday's high is the next target. Okay, so next target. Now, where's our next trade? Well, for me, at least in Trader Lab, I should say, it's here. Notice the sweeps. This is stop sweeps. And these icebergs are on this side, and they're getting absorbed by the buyers. So that's telling me that even though we have sellers in here, the buyer, it's like Pac-Man. Think of it that way. The buyers are consuming the passive sellers, which are the iceberg and the limit order book that you can't see. So this is the location for the next trade. Now let's look at a couple pieces. This is a low volume area. What that is created by is when the market blows through an area. So it's in a hurry. There's urgency. There's a sweep. This is the sweeps. This is absorption. So you have the icebergs and the sweeps and rolling higher with a bit of urgency, you might say. So this out here is a low volume area. Now I'm going to label this so you understand what it is. And it's created by the rip. So an auction is this, chop, 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 too high, too low. That's how an auction works. And inside it is high volume right there. So this is a support area. I'm going to label it just for fun. It's there. So we're just going to put a little line on here. And this is an outside edge of this consolidation. It's right here. I'm going to label that. We're going to call it a low volume node. And all low volume is outside edges. And the thing about low volume is they're not, when I first learned market profile in the mid 80s from Peter Stottlemyre, actually who created it, I thought low volume nodes, which means like here, was resistance or support. And in reality, it operates that way, except it's not a wall, it's a weak structure. So the market can come down to these areas and go through them because typically there's swings, you know. And if we come down to an outside edge, we can pop it. And then once we clear the stops out, we can then come back to the mean, which means outside to here. So my location to get long is here and against this. Remember how it works. Oh, this is too low. If we reject it, it was a target coming up, think retail. And if we get above it, is it now too low? Here's the location. Here's the location. We have a confluence. Outside edge, IB, naked volume point of control. No longer naked, but it's retail. So what it's telling me is right here is an outside edge in this area. And also, this is the current retail price. But let's talk about distributions here for a moment. A distribution is a consolidation. So chop, 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 chop. In here's microstructure right there. If we break away from it, it is saying too high. I'm not paying that. This is like your store Saturday night pint of ice cream. There's not a lot of volume up here, but there's some shoppers who will pay anything for that ice cream, for the movie. And then there's other shoppers who are going to say, I'm leaving here. That's too expensive in this time frame or fractal. So right here, you see the buyers. Let me just show you this because it's all the same in fractal. Fractals are like Russian dolls. They're inside each other. Too high. Don't know until you get the break and the test. The sellers are here. These buyers are there. They were absorbed by these icebergs. And who knows? You could just keep going. Break below this buyer, and now we're below this seller. That suggests counter rotation. Now it can only pull back here, go higher. It can come here, go higher. And structured trade in the Trader Lab is here. So let's watch. See the behavior? A little reaction there. Now here, you notice the sellers were here. This is a microstructure. I'm going to just start labeling these so you can see what I see. See this? Too high. Shoppers. I'm not paying that. Bang. Support. I'm sorry. Sellers here. Buyers here. Sellers are there. Resistance, support. So now I'm in microstructure. All I do with these, I can use them for triggers, or I can use them to see support and resistance. That's exactly what this is. Why is this resistance? The sellers were here. The sellers are here. The buyers are right below. Buyers are there. So why did it go down if I got a green bubble? Because that's an aggressor. But we have a selling iceberg. 340 are sold right here. This is absorption. So the buyers got absorbed. Resistance, right? Support. Resistance. Sellers come back in. Think of it this way. If a seller thought this was a great price to sell, if we come back there, is it possible, and I don't know what will happen, that this high volume is too high, this retail price? Now, I'm in short time frame here. Now, in other words, and there's a couple points in the rotation. That's not, at least for me, I don't trade for 2 points. I can't afford to do that. Notice where we come back. The sellers are here. The sellers are here. The sellers are here. Where's my long? I'm looking for this. Why? I want to come outside so I can rotate back here and then maybe out the top or wherever it goes. So now structured trade, Trader Lab, watch. And if you're in Trader Lab, this is a trade, if you vetted it, you would take. I come to my outside edge, this, and look at it like this is in this time frame or fractal. Too high, too low. IB continuation trade. Sellers are here, sellers are here, buyers take over. Micro high volume structure is here. This is a long. So let's watch it. Where do we come? We come back here. VPOC migration. This is now the retail price. The volume is moving up with the price. That is a suggestion of higher potential, because it's like shoppers are willing to pay more for an S&P. So in a way, if you want to think of it like shopping, and I believe, the way I relate to trading, I should say, is it's a shopping experience. Now, what happened here? Buyers are here. Buying icebergs are here. Sellers are here. Sellers are here. Buyers are here. So far, the sellers are in control. I break down here, go into zero. I break high. As soon as I'm above this here, this guy was absorbed. This guy now is under the bus. This sets up a long. We pull back here. You get VPOC migration. This is where the trade fails. Then what we're doing is we are going for this next target. Let's see what happens here. So you would get scaled. You have to scale before this. And this is even better. Let's watch it. Why? Because there were sellers there. So if you got long down in here, you must get risk neutral. If you're in the Trader Lab, I'm not saying you have to do anything, but notice where our support is. This is now a change in behavior. Let me tell you what this is called. So what this is if this is too high, where is too low? It's out here. Where's my outside edge? It's out here, the low volume node. Where did I come to support? What is this? The retail price. I'm now in something called mean reversion, which is outside in. This is also a structured trade in the Trader Lab. All we did was rotate. And if I can get long, and I have a location here, so you can't buy this unless you put a limit order there, and you're going for this. And then the objective is to hopefully come out the top and get there. Or we can just rotate around and do whatever it does. This is trading. So we'll watch this. So your long is against right here, and you're going there. 2 ticks. Remember the 2 tick rule. You can, remember, you could be 1 tick or no ticks, up to you. And then this. So that's the last trade. We're now current. I'm going to come up and look at your questions if you have any. Thanks for visiting Trader Lab today. How we doing in YouTube? Hope you're getting something out of this. This is trading in fractals. This is the Trader Lab. This is based on structured trades, and you can download these if you're interested. There's 60 PDFs. There's a link in the bottom of YouTube if you're interested in visiting Trader Lab. There's no cost. There's 60 PDFs of these trades that you can look at, and it's in many different configurations. Trend conditions, just rotational conditions, transitions from directional to rotational, things of that nature. And you could see structured trades. There's many of them, and explanations. Now, I'm not a vendor, so there's not a specific course. What there is a community. And the Trader Lab is a community of like-minded traders that have come together to leverage their collective experience. One thing you're going to find is that everybody kind of finds their groove. Some traders, and what I like to do is trade for larger rotations, only because it's less wear and tear, and I'm really not here to, I'm here to get risk neutral. My primary objective when I put a trade on is to cover my risk on the trade so that if the trade doesn't get to its target before coming back and taking me out, I get paid something or minimum scratch the trade. I also take full stops when I don't achieve my scale. It's just the real world. And other than how you feel emotionally about it, there's really not more to it. Dealer doesn't break into tears when somebody walks out with cash. And you really have to try to separate yourself from how you feel about it. And I understand the emotional side of it. You do too. But you need to separate your job, which is to play the games or the structured trades that have an edge, from how you feel, from your feelings, from your fear, from all that. Your need to be right. All of that doesn't work in this business. In fact, they're potentially the greatest obstacle you'll face, because the reason retail traders mostly do not succeed, and I think there's a couple elements, is that they get caught in randomness thinking they have an edge where they don't have one. Also, they don't have anchored inputs, and this is covered in my primer webinar, where just like the casinos, the anchored input in a casino is just playing the game the same way. It's anchored. There's no variables. No matter what happens, they just keep playing the game. Doesn't matter what happened on the last hand or what's going to happen on the next one. Well, all that matters is right now. What happens in this trade is what matters, right? What happens right now, not what. And if it gets taken out, then it gets taken out. Then there's possibilities to come further outside, and then we still have to evaluate it for either getting back up north later in the session or not. And we might not. One doesn't know. Remember, we took out yesterday's high. What was it yesterday's high? Buy stops. So it is possible we do not get, I mean, nobody can predict. 5,800 is a target. We might do it later. We might never do it. Doesn't matter because we can't predict. What matters is just taking the trade, getting risk neutral. That's why this is the target, this, and then it's we either hold this outside edge. We can also come down here and still come back here. So we have this to this out the top, or this to this, fail, and then come back here. And then we would have another long potentially, not a recommendation, to come back here. We'll have to just see what happens. Those are structured trades in TraderLab. So we already know if you're in TraderLab what you will do. We don't know what the market will do. So, and the thing about it is, in trading, it's what you will do. And then you would have for example, here, you know this is your target, and the outcome is random. If this gets taken out, there's going to be stops at VWAP and mid. If we come under here, we can still come back here. So, and that would, remember, low volume nodes are weak structures. Try to keep in mind everything. So I don't know when the market comes out here, whether we're just going to, I don't know anything. So it can come here, come here. It can, now that it's done this to this, there's stops under here. Weak structure. I can now blow out these longs, take out the low volume area, take out the stops here, and come here and then do the same trade from a different location. I already know that's my trade. So this is a long, get through here, then you're looking at this and out the top to 58. Fall under here, take out the longs, come under here, take out the stops, then potential long. It's called VWAP to VPOC or mid to VPOC. Next long, come out the top, go to 5,800. That's TraderLab. Those are the two trades I have that are structured. In between, there are other trades, if you're more advanced, that you can be doing. Let's look at something here. Let me take you back into fractal. Fractals are Russian dolls. Remember, support's here. So what happened here? High volume is here. Absorption. Sellers are absorbed here. There's a sweep. Sellers are under here. I have buying icebergs. There's my location. Who knows? I see my buyer. Now my high volume is here. Let's go take a look at it. And let's just see if we can see behavior here. I'm going to take this one out of here because it's not current. Let me just remove it to try to keep the screen clear. Buyers are here. Absorption here. Micro high volume structure. This is too low. This is still resistance. Then we have this and potentially this. Let's watch it. This is still, at the moment, mean reversion. So if you took the long here, the IB continuation trade, you'd be scaled and you'd be sitting here with your teeth chattering. There's nothing else to do here. If we get through here, then you have the potential to come up here. Buy stops are up in here for this leg. So longs are here, which means sell stops. Buy stops are up here. If you cross this, you have the potential to come back up here. So we'll see what it does. And that's it. We're current. Let's watch. So we're now just going to watch it. This can do anything, of course. If we can't get over this, then we got this. If we can clear this, then we have that. Let me just make sure I got my level here. This little one, and the next one's up here. So we have out here to there, out here to there, to there, to there, 5,800 target. We can't get above this, and we come back down here. We're going to take this out, and we're going to come here. Then potentially we got a long here, to there, to there. Same trade. different locations. So it's long unless we completely fall out. So our support level is here, variable high volume node. Take out the stops under here, always a possibility, very exciting. This to this to there. And this is the ultimate target, not a recommendation. Is everybody tracking? Now, we have VPOC migration here. This may suggest this is too high. I'm going to label it. It is resistance. Now, this can flip-flop around here. It's representing the volume here. So if there's a little more volume here, it moves down. So this is resistance. This is support. This is the outside edge. And that is also important. So all this. So you got these levels now. Now we're just hanging out. We're going to narrate and we're going to determine what the participants say about pricing. Sellers were here. Sellers are here. Buyers absorb this seller. We still have our buyers active here. Here's the volume. If we can clear this, this is resistance. We get that. We get that. Clear this. Up to 58 is the target. That's what I got. Now, questions, guys. Yeah, between shadow, you're welcome. Please give a thumb up if you're visiting in YouTube, a like. It helps the channel. The market rejected the VPOC on the retest from below. Furs, are you talking, what are we talking about here? Are we talking about 89, 90-ish? You asked me a question that we rejected this. Well, trend is up. We have rejected this. It is resistance. This is shifted down. And we may, if we push off from this, we're going to take these guys out. That's what I know. If I can clear this, then I'm going the other way. So far, I'm in a mean reversion structure, outside in. We don't have to cross over this time. We do need to hold this level, this outside edge. All we're doing, we are reverting. This is the mean. That's the mean. That's the mean. So these are the same to me. They're very close together. And now, if I can't get back above this and I break down below here, then I'm going to take these guys out and my next long is over here. First, does that answer your question? The liquidity showing up at 74. Oh, this? Not to me. This we don't know what this is. This just could be somebody throwing some liquidity in, and it doesn't mean anything. The market doesn't ever have to go here. This may not. This might just be in here to kind of skew the book a little bit, because this could pull. It doesn't. Liquidity in the book. The liquidity, at least for me, that matters is resting liquidity. This stuff is, algorithmic or just nonsense. So I hope that answers your question. It doesn't mean anything. It's no reason for me to do anything because this is the current behavior over here. So I know the buyers are here and I know the buyers are here and I know the sellers are here and I know this is too high. So I know, and that's what I know. I don't know what it'll do. So I know certain things and the rest is random, just like in the casinos. So I know this is too high. I also know if I can clear this, then I'm on my way, potentially. And if I can't get back above here and I fall out of here, then this. So that's why getting long to there for the scale is the plan. And then if it takes this out, it's, that's okay. That's the only way I think of it. It's just one trade and I'm following my plan, which is risk neutral first. So risk management, that's the job number one. Get risk neutral. Because now what happens is if you have runner, you're working 5,800 or a test of, coming up here. this structure. So that's what I know. Support is here. Buyers are here. Buyers are here. So I need to see what we do here. So that's as deep as this gets. Then it's not trying to micromanage the trade. It's trying to get yourself in a position where you've neutralized your risk, and now the trade must fail. Because to me, if I get long in here, that's a 15-point trade. That pays for stops, and if I can get risk neutral, then sure, I scratch the trade. My broker comes to the house and hugs me, and I'm on to the next trade. That's trading, at least for me. And I hope that makes sense for you guys. I'm getting a question. If I'm stalking a trade and boxed in your fractal or sandbox, and we break out of it, which is the trigger, do you think the better trade is to exit your trade at the edge that was rejected or the high volume? When we pull back, yeah. Either or. I mean, so this is the rejection, right? This is the test of here. I mean, you could put a limit order here once you have this, and then you've got to scale. Well, I would scale here, but that's me. But I tend to get long on these things, but I also read it pretty well. I think for Trader Lab developing traders, there's nothing wrong. In fact, I think it's more mechanical and more structured to use. For example, when we came up to the high of the day, if we look at this, let's go back here. Because you guys know the market's going up, 5,800's the target. So now here, this is the trigger. Now it never comes back here. Now let's talk about the other part of this. The buyers were here. This is a micro structure. When I break above it, I'm going north. As far as I know, we're going to 58, right? Because that's where my long is that I'm still sitting in. Growing moss on this thing. When you see this and you see the sellers below, here's your choices. But it has to be in the trade plan. It's not a short. I see a short trigger. Now, for me, the context is up. I can't take a short. Others can. It's not in my plan. My plan is to align and to use targets that are auction based, which is why this is a target. And it can go higher or never get here. That's not my job. My job is to put the trade on. So right here, let me show it to you again. Here's the trigger. Here's a test. This is very fast and very nuanced. Most mortals are not going to realize what's happened until this. Then, if you wanted to short, you'd be looking at this volume. It doesn't come back there. Instead, it comes under this volume, and that's your test. Okay, so there's a couple ways you can do this. And then if you're looking for a long here, which is neither here nor there, that's your resistance. And for me, it's not, because I don't have a structured trade here. My trade is here. So that's why this is the long. And let's look at the entry again. So this is the micro high volume, and it's really right there, right in here. But you see the trigger. So now you have choices. You can put an order here where the buyers took over and these sellers were run over, and you come back here. Let me show you a little structure. I'm going to show you a little something. Now, all of this, there's no precision. I always want to say that to you because I know how we are. Oh, I bought it one tick above the low of the day. Yeah, I know. Meanwhile, back at the real world. This is a consolidation. Break low, break high. The top of this consolidation where the sellers were is right here. So if you're going to try to get long, obviously this would be the wonderful spot to do it, the high volume. But the market might only rotate and come out here to this outside edge. This is what this is. This is a low volume node in microstructure. Low volume is out here. In the bigger developing time frame, which is the whole day, the low volume is out here. So if low volume is here in this whole thing, and low volume is out here and out here, and I break out of it, I can come back and check it. So 2 ticks here, stop under here is one way to do this. See the test? And where do we come back? Right here. See it? So all this has structure to it. I'm going to put a little line at the top of this consolidation. You can run the top of the consolidation if you want. This is 1 tick off, but there or there. So those are some things you could be thinking about. So, Alan, I hope that helps you out there. And Guzman and Forlot, you're welcome. Questions there. How are we doing in YouTube? How about a thumb up in YouTube? Helps the stream, lets me know that everybody is conscious. Every once in a while I hear a thud, and I think somebody's head has hit the desk. Now, this is called VPOC migration. Now, remember where the longs are. This is a structured trade. This is, you guys in Trader Lab, or even you guys in YouTube, screenshots. You want to learn the language of the market. I don't use any indicators. So what I do is I read order flow. And this is the absorption detector. So I don't have any of this, it crosses over stuff. That by the time I see something cross over, I'd be getting long here. Not me. I want to get long here or there. That's my entry, okay, for the IB continuation trade. Or subject to your skills, you can be entering, as soon as you see this absorption and we break above this, you could just enter it, market, stop under here. You get long here, your stop goes same place, it's under here. And the reason is that these sellers under here were absorbed. And you can't see it until after. That's the thing with the passive side. But when you see the buyers here, these guys are under the bus, they're not happy. And location. So I'm just giving you a sense of how you might do this. Notice this. It's a long entry. You could just put your order out here, put your stop here, and then put your helmet on. VPOC migration. Now this is language. This says at the moment, and this is all subject to change because anything can happen. Remember, write that down. It's an uncertain environment. That's why you're triggered emotionally. Anything can happen at any time, and you have no control over it. How do you like that? So if you wonder why you have a hard time doing what you are, quote, supposed to do, which means plan-oriented, it's because of your fear. And the fear is triggered by your primal wiring, the fight and flight thing, and the avoidance of danger. So that little rustling behind the tree, is that a saber-toothed tiger? Well, let's go the other way. We don't want to find out. Well, when I put a trade on, am I going to take a stop? Well, maybe that's a saber-toothed tiger. I don't want to find out. So you skip trades. You move your stops. You bail out. Anything you can do that's not in your best interest, you're wired to do. That is one of the biggest obstacles. I believe if you come to Trader Lab and you do the work, that you can learn how to trade. If you do the work and you set up and isolate conditions that give you an edge. That's what this business is. It's just like the casinos. Then you're going to have to manage your fear. Because you're in an environment of every moment is uncertain. So if you understand you're in an environment of uncertainty, you will also learn to understand why it's so difficult to operate in an environment of uncertainty, because it's triggering primal wiring. Write that down. So if you're having a hard time, which we all still feel the emotions, it's what can you do about it? Well, the answer lies in the statistics. Because when you have the IBF, this structured trade, you know it has a probability, and you can figure this out in TraderLab, and there's a lot of other traders doing the same thing to get here. And as long as you know that, and you have a viable structure and context, which is supporting north of the border, and you have VPOC migration saying that what the participants are willing to pay, the retail price, the highest volume, like in the store, you buy something at retail, buyers and sellers are doing business there. But what happens if this price or this price is too low? Now, if you want an S&P, you got to pay the new retail price. Price is going up, Lewis. I guess you got to pay it. Price went up here. Current volume point of control. Price is moving higher. Let's watch the yellow brick road. What do we do over here? Resistance becomes support. 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 Resistance. Support. Support. Too high. Support. Retail. Too low. VPOC migration. Where do we come? Take a look. It's a magic thing, isn't it? You know why it seems sometimes, trading is not easy, guys, but it can be simple. The problem in trading is randomness. Make sure you make a note about that. This is where our challenge lies. It's operating in a what's going to happen next environment because we don't know. Casinos don't know, remember, the cards that come out of the deck or how gamblers play the cards. Yet they just keep playing their game or games, right? Because they have a statistical edge. When you're in TraderLab, the job of a trader is to know something tangible, and that is statistics. And that's where the work is. It's work to kind of figure out, do you actually have a trade that has a positive expectancy, or does it lose over time? The other thing that takes retail traders down a path, I think, to potential leaving the business or failure is that everything works at times. It doesn't matter. Elliott wave, Fibonacci, doesn't matter. Pick one. Doesn't matter. It all works. Head and shoulders works. Everything works. And that's the random nature of the market. The market is random. So we see behaviors and we always see patterns. Our brains are very good at seeing patterns. So when we see patterns, whether it's an oscillator rolling over or crossing a moving average or an envelope or an anchored VWAP, doesn't matter. They all work at times. The question becomes, do they work over a large sample size, and in what conditions do they have a statistical edge? Now, I'm talking to you guys about the emotional triggers that disrupt our intentions. So what we try to do is we see random behaviors and we throw indicators, if you will, over them so that next time, right, it shows up, we'll get it. And sometimes we do, sometimes we don't. But in between, that may have no edge. So we want the big move or whatever it is you decide you want. We put the indicators over it, which means curve fitting. And next time, that our expectation is next time we'll get the big move. Well, next time or the next 10 times we may take stops and occasionally catch a move. But over time, we have a losing trade. How about if you do the work and you only interact when you know you have a positive expectancy? Now, let me come back to the topic again, emotional triggers. If you have a tangible statistic, does that give you something to lean on versus how you feel about it? Your fear, your greed, you're chasing the market, you're impulsing in and out, fight and flight, all this stuff. How do you get your arms around that problem, which is the ultimate problem, in my opinion, assuming you learn how to trade, which you can do, I believe. Not you individually, that's up to your tenacity, your ability to work in randomness and to isolate behaviors and only sit back and interact when you have an edge, which is why this is a structured trade in the TraderLab, right? Long. So on this trade, you're sitting long and you're risk neutral, and now you got your helmet on. So let's see what it's doing. Where does it come? Notice where it comes. This is another long in the TraderLab, right here. This is a structured trade. Let's take a look at it. VPOC migration. You can't buy an S&P here anymore. This is the new retail price. And what I do, since I don't use indicators, I read the language of the market. And the profile and the auction is how the market actually works. Your indicators are translators. Think of them like Google Translate. That's fine. But when you're in multiple time frames with multiple Google translators operating or indicators, they're all talking at the same time. One might say short, one might say long, and it's gibberish. There's an old saying in the computer world, garbage in, garbage out. You guys might have heard of that. Well, to me, and it's just a personal opinion, and from my experience, indicator garbage in is indicator garbage out. If you understand how the market works, and you can learn that, then you can deploy indicators that are in alignment. This is too low. The shoppers can't buy S&Ps. If we come back to this price, and right here, what I see is I see sellers here. But what happens here? Buying icebergs right to support and support. So this is a long. Here's my trigger. Remember, Alan, you asked me about triggers. Trigger is here. Resistance is there. I come back where? To the micro structure. I see a buyer here taking the other side of these sellers, a seller here. I've got my volume in here. This is minutia. And if I get along, this is my resistance. And I'm going, north. Let's see what it does. Well, that's what it does. So these are all longs. This is a long. The long from down here is a long, Trader Lab. Resistance. So long resistance, long resistance, long resistance, long, still resistance, helmet. Looking for next scale would be ahead of the high of the day, would be ahead of this, and then we're going for that. That's Trader Lab trading. This is an example of structured trading. You can all learn this. I'm not saying it'll work for you. Nothing works for everybody, and it does require you changing your beliefs. I understand we all come into the business. We believe it's just indicators, and that wonderful software toolbox has 150 indicators. You ever ask yourself why there's so many? And multiple time frames. How many time frames do you need? And then we go on the quest. And that's where most retail traders spend their time, and their outcome is dismal. Why is it? Because they're all doing the derivatives of the same process. So maybe you can learn from your experience. For myself, I tried to overcome these things with systems, trading. But I was a trend follower and swing trader. When I started in 1980, day trading really wasn't going on. You had to be on the floor. Trading remotely was really not being done. When I started trading, all my friends were floor traders. They thought I was a lunatic, completely out of your mind. And now looking back, I have to say they were right. Because I thought it was a predictive business, measured moves. So I kind of started with that. And I thought, well, head and shoulders, how exciting, and pennants and flags and triangles and all that kind of stuff, rectangles. So I spent years with that stuff. And then oscillators and technical analysis came in. So I kind of morphed into that and started putting them together. You know how you build pieces. So, and like everything, they would work and then they wouldn't. And, and then I thought I'd build a system. And I actually worked with Ralph and Bill Cruz out of Miami. They actually created something you guys have heard about probably called TradeStation. Early on, I worked with them before it was TradeStation, when they were developing that easy language. And I don't know if you guys have ever fiddled with TradeStation, but when I was working with it, it was an end of day product. So I started building systems with that. This is before TradeStation. And it was called System Writer. So it was the first thing, and it was pretty neat because I was not a programmer, and computers were still pretty much in their infancy back then. My first computer was an Apple IIe. I think I got it in 1982 or something. So I started working with the math and processes back then. And at the same time, I shared an office with George Lane. He created stochastic. So all this math was getting built in, and I started programming. to build systems to manage asset classes. So I was also managing money, beginning to manage money at that time gradually. And I wanted something so I could create a business. And I did. I created a money management firm and I had my own company. And I did that for a number of years. And I had an office. I don't know if you guys know this about me. I don't really talk about it, but I had an office in Santa Monica. So I lived out in LA, lived in Marina Del Rey. Fortunately, you know how they say, don't buy a boat, get friends with the boat. So, lived in the marina. Was right up from Venice Beach, if you know where that is. If you guys, and I'm just mentioning some geography because we're sitting in this long trade, not a recommendation. And then I would do the early version of Financial News Network. So I did live television out there. I was a guest analyst on these. They used to have shows. They were on UHF. This is all before cable, where they'd have a crawl line with stocks. And then they'd have me on as an analyst. So I used to do, and it was primarily S&Ps, ES, because that was kind of the measure. Everybody knew what the S&P 500 was. So I'd always talk about S&Ps. But I was a swing trader back then. So it was all swings, 2 to 3 day swings. That was short-term trading for me. And then the rest was trend following, in the currencies and trending markets. Anyway, little background about me. So not important, by the way. Those are the old days, as we call them, right? But that's my background. And I also wrote articles and stuff for financial stuff, consent. I'm trying to remember. It's been a long time ago, but commodity-oriented newspapers, I think it was called Consensus. And there was another thing. It was the predecessor. I think it was Investors Business Daily or something. Can't remember. Too long ago, guys. But that's just a little bit about me. Just fun facts, no and tell. And again, it's not relevant to today. It's just part of a evolution of understanding of market mechanics and trying to sort it out and build systems to optimize and try to get something more tangible. But when you put a lot of pieces together, when you build systems, you tend to go deep into a lot of calculations. And that is another form of curve fitting. It's just done by the computer, So these are the kinds of things that one does in their development. So I was able to tighten up metrics, but it was always breaking down. So even with the system, I was always doing optimizations where you take chunks of data, and ultimately you're curve fitting. So I created a term for this called Trader Groundhog Day, which is where we basically are waking up in the same place no matter what we do. You guys, I'm sure, experience what I did. That is, it works, it breaks down. It works, it breaks down. And over time, you're not moving the ball forward, but you do have strings of winners because when you optimize something, the condition it works in might hang out for a little while before it changes. And don't forget, I was in a higher time frame. So for me, I was trading like an intermediate time frame in the S&Ps. Trend following is a different animal, like with currencies. Currencies are trending markets. Remember where our trades are. So we have this to this. Notice we have, and this, I think, is this a variable high volume node? This is resistance here, variable high volume node. So our next trades, if we break down and take out this outside edge, are going to be down here. We already know, and they're not trade recommendations. Do you guys have questions? I'm going to come up again and check. How we doing? Michael, which area was that? Are you talking about Venice Beach and the marina and all that? Yeah, P. Elliott. Hi. Yeah, oh, you lived in the marina for 7 years. Nice, huh? Yeah. Yes, I do. On the Global Plus, I execute right off of here. Show you what it looks like. And I use bracket orders because they're OCOs and they're server side. So I just do it brackets. And here's the other thing about a bracket. Let's say I have one. If I want to put a 2 lot on, I got to click it twice. So it's 1, 1, 1. if I put, and that's just for this. There's other ways. We have Execution Pro. We have other execution processes. But this right here is an example. Here, right here, we have buyers. This is support. This is the outside edge. Stops are under here. Next long would be out in here. I'm just going to show you how this works. This is not a recommendation because, this can do anything right here. So basically what you can do then is you can grab like this and move it around, or I can grab this limit and just move it up. So now I have my resistance is here. So this would be, now this is not a trade I can take, but I'm just saying, I'm just giving you an example and of how this thing works. And then, you'd be going whatever. Now over lunchtime, market tends to get into it doesn't have to, but it can tend to rotate because the volume tends to lighten up a little bit. I used to always do this on the floor. A lot of the stuff you see here, I developed many, many years ago. And let me think, 20 years ago or so. So I've been trading like this for a long time and derivatives of it. I mean, what I've done is over time, I kept going down in time frame, and I figured out that I can read behavior because it's generic. Think Russian dolls. So if I know buyers are here and I got my buyers above this seller, the possibility is, so this is now potential support. If I can clear this, I can go here. And again, I can't take this because my long is down here, you see. So there is no trade here. I'm just showing you how the dome, not the dome, this on chart. I really like it. So this is where I execute. So right here. So I can if I want, I can just put my pointer like right here and just put a limit right there. And if it picks me up, now this is unfortunately resistance, but if I can clear this, I can come up here. I think. Let me just see if I got the right level here. I gotta get my yeah here. So we'll see. And it can also come down. I mean, this is not a trade I can take, but I'm trying to just show you how you can manipulate this. So what happens is if it picks this limit up here, and I usually give it 1 to 2 ticks. This one has 1 tick. So if it picks it up, then the stop gets placed and there'll be a limit order. Then I just adjust there. It got picked up. So you'll see the stop is here. And I'm just going to put this over here. And the variable high volume node is there. So I'm going to put this 1 tick in front of this, which is that. And then we can put this here. So we'll just leave it. Let's see what it does. Are you guys tracking? Hope you're getting some out of this. So P. Elliott, I hope that shows you. How we doing in YouTube? Yeah, Michael, it was really nice. I used every day after trading, because it would be done around 1 p.m., 3 p, because I was out on the Pacific Coast, I'd head out to the beach, take a walk down to Santa Monica from Marina del Rey. It was very good to clear your brain out after trading, to go for that walk. I found it just, with the ocean and the surf, and of course, Venice was really pretty cool back then. So it was very interesting. I had a lot of fun out there, and plus doing the. So yeah, it was good. Expensive. But that was okay. So I had an office in Santa Monica. So I was what's called a trading advisor. I had my own company, and I managed money. That was basically what I did. So I was out there. So that's not important really. It's just a little background, Don't really talk about this stuff, but I figured as long as we're sitting here watching the paint dry, I might as well just give you something just a little fun facts now and tell. So why did I scale here? Because this is too high. That's the variable high volume node. So that's why it's a scale. So I'm just showing you a little, nothing fancy. And this is the next resistance level. If I can get here, then I get another scale, I think. And then I got this. So that's the trade, Now, it's not a recommendation because, like everybody, I get thrown under the bus. So it's part of the thrill. Whoops. This is theoretical average. So I have a scale. So what it shows me is I have a 3 lot on here in sim. 5785 is basically where it scratches. So basically, I can now, it tells me where my break even is. So if this takes this out here, which it can, then I scratch the trade. So, and this is included in Bookmap. And I like it because for me, it gives me a sort of peace of mind to see where I would scratch. Because now I'm sitting here, I've got scaled. So I bought my stop on my runners. So I got a 2 lot sitting here. And of course, if it takes this out, me and everybody else gets taken out, but I scratch. And that's when my broker sends me a gift basket. And if I can get up to the next level of resistance, and I'm only giving you guys an example, it's not anything. It can be something. But where's the structured trade in the Trader Lab? Here, and this, no comment. Are you guys with me? If you're interested in learning how the market works, why it does some of the things it does, and how at times you can get in alignment with it, there's a link in the bottom of YouTube. Come to Trader Lab. There's no cost. It's a community of like-minded traders. You can learn this. There's 60 PDFs of structured trades. If you haven't seen them, look like this. So you can see these trades, the behaviors, and reverse engineer them. I'm not a vendor. There's no cost for this, but you do have to confirm your email. So, and some of this is research that I work with Bookmap developers, and I was trying to work on something to help with order flow for developing traders. It's been jettisoned. It does exist. I don't use it, but I do a lot of research, and this is the kind of business where you're always looking under the rock for things that might give you a statistical edge. So I'm always trying to get better. If I can shave a tick off of execution, I'm a tick closer to getting risk neutral, that kind of thing. Over time, as you develop and you get more skilled, which takes a lot of intentional practice, you improve, you want to improve. It's no different than a professional athlete. Please give a thumb up if you're visiting in YouTube. And if you are interested in the Bookmap Discord Trader Lab, there is a link in the bottom of YouTube. Give the thumb up. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, review, screenshot, circle arrow, and they also can replay this. So thanks, guys. Hope you got something out of today. Remember, the Trader Lab is a community of like-minded traders. And not only that, there's a lot of additional education that Bookmap provides. You can access all of that if you visit the Bookmap Discord Trader Lab. Also, there's a free digital version of Bookmap. Take advantage of that. Get your hands on this. Comes with data, and you can kind of get your toe in the water there. And if you are a subscriber, you get a subscriber exclusive education in addition to that, and again, at no cost. Thanks, guys. Have a great day, and I look forward to meeting you in the Trader Lab. See you soon.